Do 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 RHT Red Hat. I did Red Hat way back. One of my first podcasts in January was still in a strong uptrend. Where's that? NASDAQ. No, New York Stock Exchange for tech stock. Yay! Sector technology, industry software. Here we're on the monthly before we head down on the weekly to do stage analysis, Stan Weinstein style. You see right here, you had these, not tweezer tops, but these long wicks, pressure going down, price action going up, again, trying, just not quite able to continue through that. And after that, red candle. And that's all she wrote after that. Price action closing below 12-month moving average. Price action staying below the 12-month moving average. And what you're getting after that is flattening 12-month moving average. And this could be a likely scenario right there. What else do we have? Monthly defined breakdown line. Right here, 120 level. And you had price action below it during the month, but you have to wait because you see the price action brought it back up, and now it's 1 or 2 weeks off the close of October. As long as it closes above, you don't get that crazy. And when I put these targets, man, on the stock twits or Twitter, sometimes I get a lot of heat, especially on Twitter on stock twits. It can't go back down to that. What are you talking about? Well, I don't know. It looks pretty sweet to me, man. That's a nice measured move. Brings me down to previous wall, previous resistance turn support. And when I have a target, I have this thing called target considerations. So if I see the target really rams through or maybe this one right here, this pattern here, I'm just going to move the target just a little bit above just to make sure I get triggered out. My profit limit hit just to make sure I'm the right side. Because all this, you have support starting here and all this support zone until you find the natural support right here. Oh. So that's it for the monthly chart analysis. As long as the price action is below the 12-month moving average, you don't want to be buying. The longer the 12-month moving average, there's action below it, the more it's going to start skewing, declining, and then you have that prevailing trend. Just like the price action above that 12-month moving average is creating an uptrend, helping you. So when you go on the weekly, you have the power of the 12-month moving average of the monthly chart, up and up and up. Look, there's no month that it closed red. This is like you sleep like a baby. Never too far off the 12-month moving average. Maybe here getting far away. Sideways move for a month. And then just continues until you get too far away. And then volatility, these crazy increases, getting sucked back in, attracting sellers, saying, that's it, ride's over. And you just need some time to rest, guys. Okay, let's head over to the weekly. What do we have here, guys? Okay, 30-week moving average. Look at that, how nice size. The Mansfield Relative Strength Indicator is so awesome compared to the SPX. Stan wants you to be outperforming the index. I'm comparing the SPX. If you can't beat the SPX, well, might as well buy it and just stick with it. Green zone, 30-week moving average inclining. Price action above the 30-week moving average. So that's a few checks that help you get that weight of evidence that you're in a stage 2, that the stock that you want to be in, guys. But after that, you're out here. That's a big warning sign. This big red candle on huge volume, huge warning sign. Something's up. And if you didn't exit on a trend line violation, if you didn't exit on the previous sell stop, because the Stan way, the trader's way, You move your sell stops every time there's a go up, pull back, go up, move your sell stop here. Oh, you could move your sell stop here. It went back up. Maybe here. Here. Oh, here. Here. And you would have exited right about here. There's under warning signs to be able to give you exit strategies or take half positions off or full positions. Trend line violations. Stand. Sorry. On the fourth break, if you have, he requires 3 points, and then on the fourth you're up. So a trend line has to have 3 connected touching, 1, 2, 3, and then you're hugging it, and then when you close below it, half your position, you're out. But here you would have had a sell stop, and you would have, I don't know if this was a gap down, but you would have probably got triggered out when this got triggered. My cough is not finished yet. What else? Price action below 30-week average. Oh, trying to get back above. That's not a good sign. More sideways move. Trying again. Not able to go above 30-week average. Not able to get back into that stage 2. And the longer you're below, the more the 30-week average is trying to go down and then break down. Broke down here, but we don't want to short yet because we want to be out of the Ichimoku cloud. Even if you have these crazy warnings, look at that candle, huge red volume right here. We're gonna wait. We're patient. Here also sideways move, another horizontal support on the weekly. No, we're waiting, and right here we're out of the cloud, increasing red volume. And here it would have been a nice entry to short. You short here, or wait, hold on. Let me check something. Do we have monthly confirmed? Remember, you always try to find a reason not to get into the trade. We're not even below the weekly. Here's the monthly defined, right? I didn't change that line. So it coincides pretty much with the weekly defined support line. And you see, the weekly did not want to close below that 120 level. And the monthly did not close below that 120 level. We're still in the monthly yet, the October. This is the October candle. So it's still not a short because you're still missing. You don't want to get whipsawed. You're still missing those last few elements, that monthly close or at least a weekly close. You're still not there yet. So even if you're underperforming the SPX, you have these huge red candles telling you warning sign. You're below the Ichimoku cloud. This is telling you that this might have some energy to try and pull up either close to that 130. I don't like that line. It's crooked. That 130, 132 support. Turn resistance. And maybe a pull down here, or else even maybe more power, and maybe able to go. Let me draw my line. Right here, maybe even go test this. You only know how strong that support is or that resistance is if it fails. So if there's a test of that resistance and it doesn't make it and goes back down, then you know, okay, that was pretty strong resistance. The more resistance is tested closer to the breakdown line, the more I trust it. Here there's a 2-3 weeks pattern here, so there's a good chance that it could slow down right here, like that first line right here, or else if that fails and goes right through, we could easily come and retest right here at that level at that 140. And if it does that level at 140, after that maybe go down and exit the Ichimoku cloud right here. Good risk to reward entry right here, especially if it's on the contracting volume on the way up. So if this stays low, green candles here on the way back up, If it gets close to the 140, then right here we'd have, and it starts going back down, we have a good entry right there. Lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. Downtrend. Looks like a channel. Even the channel, downwards channel, that's the definition, right? Always having lower points, lower points. So that's pretty much how it could work out right here. That support, that Ichimoku cloud support. See how that resolves right now. You're very close to it. It's going to attempt to go back in, probably since here at the end of the month. And if it doesn't, if it decides not to pull back and we get a solid close below the 120 level, and after that it's that 80 target if you use my monthly chart trading framework, and or else it's just a standard stage 4 breakdown, guys, where you enter, then on a pullback, closer breakout line, you could enter some more, continuation breakdowns, you could enter, etc. Red Hat is fighting for its life, guys, and it's really on the brinks. That 80 target is real close. We'll have to wait for the end of the month. And if it gets back up, well, after that, we'll just have to, it's not going to be stage 2, because as long as you're below 30-week average like that, you're still in stage 4. But it might get a reprieve in a few more weeks to try to get back, claw itself back into a stage 3, guys. That's it. Red Hat. I'm very close to shorting you. All right, guys. See ya. Do, 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 do. Do, 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 do.